Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
LME 3-month nickel. Okay, so just to remind you once more, I have said repeatedly on this commentary for months and months that the most significant feature of this market has been the key lows of 2021 at 15,665, which led to the lows of late November 23, plus the lows in 24, most recently in late October, November and early December. And I suppose also the congestion in January, February, late April, May and early June this year. I'd also heard that for many months I had also highlighted how the 15,840 level, along with the low for 2021 at 15,665, was and is still key. So 15,665 has next to it the slowly dipping mauve medium moving average, currently at 15,615, and nearby the declining green short medium moving average, currently 15,430. Above these we have the dark blue July 24 to November 25 head and shoulders top neckline, currently at 16,040, and the long moving average currently at 15,900. Altogether these are pretty heavy duty resistances that have easily capped the market. Meanwhile, prices have been challenging the 50% Fibonacci line for 2025 at 15,325 on the downside, which had acted recently as a base of action and was pierced 3 weeks ago and again last week, and I will delve further into this shortly. Now, some distance below we have the November 2020 low at 14,935, which helped halt the decline 3 weeks ago, along with the 38.2% Fibonacci line of the for 2025 at 14,980, plus back then the bright red middle time, currently 14,655 of the early October 24 to mid-March 25 bearish shift pitchfork, though this is now departing lower and is thus not reinforcing the November 2020 low anymore. Interestingly, this middle time even now is still not validated, but the lower time, currently at 13,375, well, that helped halt the fall 10 weeks ago on a closing basis, and arguably also partially on a low market basis, along with the October 2020 low at 14,040. So I'll take the pitchfork pattern overall as having some pretty good integrity. Now, the hesitation we saw in April and May ahead of the 16,000 to 16,780 area was enough that we can look at the mid-April to end May action as a double top pattern, even Eve type. 3 weeks ago we breached the neckline for this pattern down in the 15,200 level, just below the 50% Fibonacci line for 2025. And as I said 3 weeks ago, and I quote, "You would need confirmed consecutive closes below this level to contemplate the downside. But whilst I cannot set targets below, I can indicate potentials. Thus, the primary potential after a confirmed break low would be down in the 14,835 zone, so not too far away, whilst the secondary potential lower would be down in the 14,380 zone. I say again, these are just potentials, but ones that might come about as targets if a move lower happens before I can get a chance to comment next time." End of quote. Well, 2 weeks ago I said, and I quote, "We have not had a suitable move lower despite the break low, and I'm now considering retiring this idea." End of quote. I am glad I did not pursue this idea any further of retirement, as today we are testing lower to new lows not seen since mid-April. This now leads me to clarify the status of these two potentials with a primary target X not too far away at 14,835, and we have almost been there but not quite, and a secondary target X1 down at 14,380. Ideally, I'd like to see a true move below the November 2020 low at 14,935, but these will do for now. LME 3-month zinc. Much like LME aluminium, there had been here a number of patterns affecting the market in recent times, all happening at the same time. The first is the thoroughly broken, but not even now, still refusing to die, old dark blue May to August 23 bullish shift pitchfork that subsequently acted as an August 23 to April 24 bull channel, especially the upper and middle times. This one still will not die, even when I thought 10 weeks ago that it had finally expired. It is still nevertheless influencing the market, especially the dark blue lower time, currently at 26.59, along with the March 21 low at 26.27. Next we have the bright green mid-December 24 to mid-March this year bearish shift pitchfork. Prices right now are once more just above the middle time below, currently at 26.37. So what else have we to look out for? Well, further down we have the low of March 21 at 26.27 and the congestion at 26.01. Plus from early August last year, congestion at 25.49 and 25.59 and 25.63, as well as the important 2021 low at 25.47 that prompted those lows in August in the first place. So far, these have been a base for this market and have given ammunition to its recent attempts higher. Meanwhile, topside, as I said 2 weeks ago, and I quote, "I'd keep an eye on the declining green short medium moving average, currently at 26.70, and the mauve medium moving average, currently at 27.60, plus what I suspect may be a key level, the 50% Fibonacci line for the whole March to April move at 27.55. This is not the whole of the 2025 action, just the whole of the major move of the last few months." End of quote. So we are finally left with a choice on the interpretation of what the whole late March to date drop and hesitation might be. So is it a basing action for a possible future attempt higher, back up to the broken dark blue upper time, currently at 29.88, or is it a hesitation, a somewhat large hesitation, with potential down to the 23.10 zone? Right now it's not easy to say which, but I would keep an eye on the following: the bright green bearish shift pitchfork, the short medium moving average and medium moving average, and the 50% Fibonacci line in between them. They all have that given a clue to the bearish future, which we seem to be embracing right now. So watch that bright green middle time, and as an outside level, watch below for the action at or near the February 2021 low at 25.47. LME 3-month tin. Okay, so the big picture here is now centered on the recent dark blue late November 24 to mid-April 25 bullish shift pitchfork, where in between the lower time below, currently at 29.770, and the middle time above, currently at 34.555. Now, as I've said here previously, much like some of the other metals I've discussed here, there are a number of patterns here affecting the market all at the same time. Looking here Monday 10 weeks ago, the market halted right on what was then the now retired broken lower time of November 23 to November 24 bullish shift pitchfork. It bounced back up for a day, but then 10 Wednesdays ago plummeted further down, all the way to just below the July 2011 high at 29.005. On the way down, it passed through the now flatlining gold long moving average, currently at 31.530, and the mauve medium moving average, currently 32.465. Closing below both before turning back up again for just a day in the middle of April, and then dropping down again, though this time not so far, just to the combination of 50% Fibonacci line for the March 23 to April 24 move at 30.010, plus the bright red neckline extension, currently 30.295, and that's at the October 23 to January 24 reverse head and shoulders bottom. The market pierced but did not break the now retired lower time of the late November 24 to April 25 bullish Andrews pitchfork. At that point, the market turned higher, reaching up to the broken lower time, and saw for a while prices trail along the underside until 4 weeks ago, and I'll speak on this subsequent move shortly. However, first, 5 weeks ago, the market moved just over the purple neckline extension, currently at 32.580. The April 24 head and shoulders continuation pattern, but failed to stabilize over it. And 3 weeks ago, prices dropped back down to the bright red neckline extension before rallying once again. And then this week looking like we may head lower once more. So the overall question I raised 3 weeks ago was whether the recovery back up was now part of a straightforward recovery, or would it perhaps become part of a bearish halfway hesitation in the making? 4 weeks ago, looks as I said 3 weeks ago, and I quote, "Right now it seems the market is slowly eating its way higher, with the green short medium moving average and the broken lower time and the cap on rises." End of quote. And that proved to be the case in that cap exhausted all the appetite of the rises, and were failed so far last week and this to move higher than we saw in May. There is even now the possibility that we see prices head lower below once more all the moving averages for a fourth time, creating a strange potential head and shoulders pattern from early April to date. There is still the chance that this whole early April to action could possibly be a bearish halfway hesitation. Indeed, if I looked at other metals or other markets, I would say would be a distinct possibility. But here, well, this bright red neckline extension is bothering me by its strong ability to hold up prices.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.